Let's get Dhiraj Agarwal, Managing Director, Ambit Investment Managers. Dhiraj, good morning. Good to have you with us here. Thanks for your time. I guess we got to start with the RBI actions in the recent past. And are you, in your conversations with peers and other money managers, is that coming up as a bit of a question mark for NBFCs as a sector, or not really?
Not really. I think it's very, very specific at this point of time. I don't think the whole sector will suffer because of that. But yes, one signal from RBI is very, very clear at this point that they are ready to take decisive action. So it's a clear message to the industry that please fall in line. It's also a clear message to the industry that if we are raising issues or concerns, please respond timely and take corrective action. So in some senses, I think the regulators do what they're supposed to do.
Okay. Dhiraj, but it's not so much about these individual stocks as much as it is about the general sentiment, right? At a time when the market is at an all-time high, now here comes the RBI cracking down on several sectors. It just gives rise to a bit of caution in the system, especially towards the NBFC space. Would that be your concern as well, that there would be this sentiment overhang and hence there could be some sell-off as well? And if yes, what should one be doing with the stocks that they own in this space?
No, I think if you look at RBI's warnings and RBI's red flags, it's been going on for a while. It's not very, very recent. RBI has been sounding alarms on multiple things. One is unsecured lending. Second is the high CD ratio of the banks and low levels of capitalization. And third is some of the specific actions which is taking place at this point of time. So there are a few spaces in the economy where RBI has been worried, and maybe rightly so. So will it dampen the sentiment a little bit in the near term? Perhaps. Will it change things materially? I don't really think so.
All right. Hi, Dhiraj. Good morning and good to see you in. What about the preference between basically large cap and small caps? Year to date in this fiscal, small caps, mid caps, they have been rank outperformers. However, in the last 30 days or so, the Nifty is outperforming. The Nifty Bank is outperforming. So at current reckoning, going by that, I think the mid-cap index itself is at a 30% premium in comparison to the Nifty's valuations. Would you deploy more money in the larger cap names?
It's best to take a stock selective approach, I think, to some extent. Mid-caps and small caps as a complete asset class, I think, looks slightly risky. There are individual stock picking opportunities in mid-caps which still exist. And that's the nature of the mid-caps. It's so diverse in terms of both sectors and business composition that painting them with a big broad brush is also very, very difficult. A lot of large cap companies have become, in terms of valuations, have become attractive and relatively better buys at this point of time. So for a while, it's possible that the large cap does a little better than the mid-caps.
Let's share some names then, Dhiraj, if you could do that. What do you think is best place right now? The banking names, actually, they were underperformers. They are bouncing back. And there is valuation comfort because earnings cuts are not coming about there. And valuations are getting more attractive. Would banks be top of mind?
I would say banks is still a very, very diverse, diverse space again. So, for example, I like some of the PSU banks, I like one or two private banks as well, but not everything in the banking space. Because if you actually plot the individual fundamental metrics of the banking, you can actually plot them on sort of a curve, something near the top, something near declining. Few companies are still on the ascending mode. So 2 or 3 metrics to look for in the banking space at this point of time is, one is how is the CD ratio doing? So if the CD ratio is very, very high, which means the bank can actually struggle a little bit in terms of funding its growth. That's a little bit of a red flag for me. Second, one should also look at the valuation versus growth versus ROE, because all the large banks' ROEs are converging. So this year, all major 5 banks' ROEs will be within 100 basis points of each other. And hence, the valuation gap will also not be very, very high. So that's the other metric to look for. So these are the 2 key metrics that I look for in constructing a bank portfolio at this point.
Okay. I wanted your thoughts also on a couple of other sectors. By the way, I wanted to mention that some of these names like Tata Motors continue to inch forward after that big move yesterday that Tata Motors saw. There's an additional 0.5% rally. It's piling on the volumes as well this morning after, demerging of its passenger vehicle and commercial vehicle business. Dhiraj, very interesting, right? I mean, a lot of these large groups like the Tata Group are doing a lot of work to improve their balance sheet, to unlock value for shareholders, like Tata Motors, for example. Despite the rally that we've seen, do you think that more money can be put to work here?
I mean, I've liked Tata Motors for a very long time, and one of the primary reasons for that is the whole deleveraging story and the whole capital allocation corrective steps taken by the management and the company in the last few years. So they've focused their capital expenditure, they're focused on new model launches, they're focused on free cash flow generation. Domestically, the car business is doing really well. So I just continue to like it. I think they're doing the right things in terms of both generating free cash and now demerging to make the business structure a little bit more cleaner and clearer. Because that's one of the reasons why many investors didn't come into Tata Motors. They said it's a bit difficult to understand.
Okay, so, well, if you're talking about the markets, very, very flat right now. Not too much happening, but some of the stocks, we were just talking about Tata Motors, right? Even something like a TVS Motor has hit a fresh 52-week high. So that one is now at a fresh 52-week high. It's had a very good run this year, up about 13-odd%. ABB India is at a fresh 52-week high as well. And a couple of other names also sitting at fresh highs. So just wanted your thoughts before we let you go on, I mean, since we spoke about Tata Motors, any thoughts on the two-wheeler space? Do you like names like TVS as well?
We like it, but I worry a little bit about the valuations now. We like the two-wheeler space in general. That space is bouncing back after many years of volume struggle. In fact, even now, the volumes haven't crossed the 2019 peak. So there is some more runway of growth for the entire two-wheeler space. So yes, the short answer that we like the two-wheeler space at this point.
Okay, all right. We'll leave it at that, Dhiraj. Thanks a lot for joining in and talking to us about the market as well as the way forward. By the way, we were just chatting about Tata Motors.